Doing, of course, everybody knows that I follow all the time frames, and look at this time frame. There was supposed to be a bounce either here or here, and we are getting a bounce either here or here. These two were the spots. Yesterday we were discussing that if it breaches here, it's going to test this number. Obviously it did, and for further more confirmation, looking for something else. Here is another bounce spot. Is there anything else here? There's nothing else here. So we got a bounce spot, good bounce spot. And besides that, oil is stabilizing. So took the trade here. And I'm right now, I'm trying to get back into that riskier trades again. So I'm trading it, not advising everybody to do that, but this was a trade that was sitting there, and this was supposed to be taken. And nice move right here. I was expecting it to hit right about till here, the mean on the 15 minute, and it followed the technicals. We had the overbought condition, oversold conditions here, and hit the 5, hit the 8, hit the 21. I exited here 39.30, 39.31. It obviously still has room to the upside, moving up. Very likely it's going to hit 39.40 to about 39.40, within this range, 39.40 to 39.45. And again, it should take a breather. And why? How do you confirm this? Two ways, or rather, I mean, more than two ways, of course. But what I look for is obviously first thing VIX. VIX. Yesterday we were looking forward for VIX to hit this resistance, right? The 200 moving average on the week. That's where we are saying that it's going to hit and it's going to take a breather from there. That's exactly what VIX is doing. It hit that number, took a breather. Very, very, very good entry spot right here. And look at VIX here, pushing all the way up, hitting the upper inner Bollinger Band. Fair enough. I was thinking it's going to hit the mean and come back down. But here is the major resistance for VIX. It is hitting that for now and taking a breather. Now, how far of a breather? I don't know. For that, probably, likely we want to go here on this chart, and we wanna see how far of a breather would it be. Again, the same thing. Technicals are overbought here. Technicals are overbought here. If it starts to move down, the path it's going to take is the 5. 5 breaches, then the 8. 8 breaches, then very likely it's going to go down into this 22 number. As of now, not really plotting this 22. As of now, expecting a bounce from the 5 again. 2260 around that area, and if that breaches, then a very modest about 2245. And now, why am I looking for this push to the downside? Again, let's go back onto the driver. This is the chart that I've been following, and this is where the money is made. And it's coming down, fair enough. Till here, we knew it was going to bounce till here, from here, and it did bounce yesterday, day before yesterday, and it's the push to the downside on the markets. Now, if it breaches here, it's going to obviously go down into this number, about 3.35 or something like that. Maybe not a story for today, but this is the path very likely it's going to take. And for the thesis, if it hits the mean, very likely it's going to come back down into the lower inner Bollinger Band, and that is sitting at about 3.35. And if this happens, obviously the market will move to the upside. And if it bounces from here, which is unlikely, well, because we still have the MACD to the downside, and a few other things like oil and all that. We'll look into that as well. But if this comes back down, then very likely market will move to the upside. And that's exactly what is happening as of now with futures. Let's look at the same data. What about here? So it is still holding this line here, and I'm still thinking that it needs to move to the downside. Very likely we want to see it push all the way down here to 3.45 for first bounce again, and after the bounce, very likely it's going to push down into 3.3. So watch this bounce here, and how far of a bounce I don't really know, but expect a bounce around this area, 3.45, around that area. And if so, let's look at a larger picture here. This is the bigger picture, right? And it we knew this is the monthly chart. We knew it was going to come back down into five, and if five breaches, it's going to go down into this eight. And if CPI prints comes in lighter than expected, this will crater to the downside. And very likely it's going to push all the way down here into 2.6. As of now, that is not the base case. The base case is right about here, 3.29. And for that to happen, it needs to clear that 3.45 and then 3.33, 3.32, then come down into 3.3 or 3.29. But this is the bigger picture, and based on this bigger picture, again, this would materialize if CPI comes in lighter than expected, but if CPI comes in hotter than expected, expect a bounce right from here, back up all the way into 4. For now, that is not the base case. For now, expectation is that the CPI would come in lighter than expected because we see the demand collapse all around and the rents are coming down. Rent is one of the major contributor to the inflation, and the shelter inflation doesn't come down so quick. But the Fed has been working on it, and the housing market has been in a recession, and the tech has been in a recession. So that is all. Those are all the factors that are contributing to the inflation fight as of now. So expecting that CPI number to come in lighter than expected. If that happens, expecting this thing to push down. And if 10-year pushes down, then very likely we'll have a rally in the markets. Right. And this is where the liquidity comes from, by the way. Right. So that's about the US 10. And let's look at the DXY as well. DXY, we knew it was going to bounce from this number right about here, 104.30 or something, which it did. And as expected, it was supposed to be an ephemeral bounce, which it is happening right now. And if it comes back down and breaches this 104.50 again, very, very, very likely I'm expecting DXY to come back down into 103.80. Not really plotting anything below 103, actually right about here, 104.50 for DXY. Let it breach that, then let's reassess the situation. Very likely to come back into this number, the 50 moving average on the week, 108, 103.80. That's a bigger picture. And the MACD is still intact to the downside, right? So let it do its thing and let's let it finish the cycle, and we'll see what happens. Ephemeral bounce, yeah, could be another ephemeral bounce from 104 or 50 or something like that. But if the driver, which is the 10-year, if that keeps pushing to the downside, then this can't do much. It has to push to the downside alongside with that. There could be a lag on that. It's not really one-to-one correlation between any of these. So you need to figure out, you need to synthesize that data, and you need to figure out a correlation between which factor is having more of a weightage on SPX. So based on that factor, you proceed with your trades. Right. So let's see the same data here. And we still have MACD in a crossing upside position here. It hasn't crossed. So, and yesterday, this is the line we were watching, right, the 200 moving average, and I was saying that I'll take DXY seriously if it clears this 200 moving average on the day. It hasn't done that. It is still pinned below that. It tried a couple of days, and it is still pinned below this 200 moving average. Until the time DXY clears this 200 moving average on the day to the upside, I am okay with it pushing, trying to push this number and taking a breather from there. And if it clears from there and it starts to move towards the mean, that's when I'll start to take DXY seriously again. Till that time, it is just a number that I'll be watching to oscillate between the trades. Right. That's the DXY, and VIX, of course, it's doing its thing. Let's look at VIX here, the bigger picture. 200 moving average, a hit of 200 moving average, a breather there, and I think this should be again till CPI. You can't really say which way it's going to trend. For now, I think it needs to be between either below this 200 moving average, 100 moving average on the week, which is about 23, 23.10, to about 23.80. Within this range, VIX should behave within this range from anywhere between, if it remains pinned below this 200 moving average on the week, about 23, 23.10, that's very good. But if it clears there, it should take a breather right about here, 2390 to 24. I'm not really thinking that it should clear there as of now. And majority of the market participants, I think, are waiting on that CPI print. If the CPI print comes in lighter than expected, I would expect VIX to remain below this 200 moving average in the week. And if CPI comes in hotter than expected, I would expect it to push to the upside. Very likely the path 24, then about 2550. Then if it clears this 2610, then we still have more room to the upside. This is the 50 moving average. And if it clears the 50 moving average to the upside on the week, then definitely we're seeing more upside for VIX. Monthly chart for VIX, long-term support. I would still expect, so let's say if CPI comes in lighter than expected, then I would still expect it to come back down here into perhaps 17 to 16 reading, 17 to 16 handle on VIX. So a good decent, about 20 to 30% still push to the downside if CPI comes in lighter than expected. Again, a lot is riding on that CPI number, and the expectation, the reason that we are watching the CPI number is because if the CPI number comes in lighter than expected and the Fed guides towards a slower pace of hikes, then very likely we'll see a bounce in the tech. Okay, that's what we want to see, and that would be tech is not my favorite sector going into next year because of the higher interest rate environment, and tech will not, or the growth will not perform. We'll be looking at a very moderate growth or low growth going into next year. Interest rates will remain elevated, so the best thing to do is either the small cap or the industrials. I think small caps is not my thing, so I would probably stay away from that. Even if I get involved with small cap, there's something called TNA. The ticker is TNA. It's a 3x leverage fund for IWM. IWM is a small cap ETF, which corresponds to Russell 200, 2000. So if you believe in that, the higher interest rate theory for the next year, so you would want to either be in that small cap or I like the TNA, but most of the time I don't really trade anything besides SPX. So yeah, and I think the tech will not be a good performer going into next year. I think you would want to stick with industrials. DIA is the ticker for that. Diamonds, those are called diamonds. DIA is the ticker for that, and there's a 3x leverage fund for that. It's called UDAO, right? So either you want to be trading with that. I think that will give some decent results. For the past 3 months, DIA has been outperforming. In fact, the Dow has been outperforming the tech index, the Qs, so or the Nasdaq. So watch for that trade. Right, and which is the other one? Let's look at the technicals here. Let's plot the downside properly here. All right. So right now we are seeing a bounce and 3980 as we were expecting it to move all the way up here, right, to a damn T. It came up, and if it clears here, 3940 or something like that, then expect we started our charting with this, right? If anybody was in an immediate trade, we started our charting with this number, and if it clears right about here, 3940, again expected to push into 3941. Very likely another breather at about 30, between 3940 to 3945. I'm looking for a breather. Not after the breather. We will come back and revisit and reassess the situation, perhaps all the way up here into 3950. But for now, it should take a breather from this 3940 number all the way up to 3943 actually. But let's round it up at 3945. And this is the hourly chart. The mean is sitting right about at 3942. So the inner Bollinger Band, inner lower Bollinger Band is getting tested and it's getting rejected so far. And if it clears there, the mean should get tested. And if it tests the mean, very likely it's going to test this upper inner Bollinger Band at 3945. There is not much ammo here for it to keep going. But if oil stabilizes, then very likely the market will stabilize. US 10 keeps pushing lower and lower. That's the new low for US 10 right here. And yeah, so if it breaches here, then we're looking for a push all the way down till here. That's the monthly chart. Let's go on the week. Next up is right about here. I'm looking for a 3.45 bounce. That is coming from the the daily chart right about here, the second standard deviation. As of now, not plotting this number 3.12 and not really plotting this number as of now. We are looking for a bounce right about 3.45, 3.44. After the bounce, I don't know how far the bounce would last, 3.49 or something. And after the bounce, I'm still expecting it to come back down and test about 3.35. If that breaches, very likely it's going to test about 3.21. That's the way it's going to go. Right. And what else? Apple. We did. Okay, we did not do oil, right? Okay, let's get into oil. Oil. This the chart suggests that it needs to come back down, and very likely 64. But that's not a story for today. Not a story for this week. Let's look at oil right here. So oil was expected to hit this line right here and bounce off of that line, and it came pretty close to that 70 to 50 number, hit that 72, 77 or there off, and it bounced. But I'm still thinking that it needs to come back down and test this 200 monthly moving average and then bounce. That would have been a better bounce, I think. That's a 2 point bounce, better than 2 point bounce on oil. I couldn't catch it, but still, doesn't matter. It needs to come back down into this number. 72.5, and if that breaches, very likely it's going to stabilize around 71, and that's what the note I put in yesterday. Cool. So yeah, looking forward for that. And on the lower time frame, oil must have gotten pretty decent oversold. Let's look at this number here. Yeah, looks like it got oversold. Looks like it is bouncing. Fair enough. Let it do its thing. I'm not in this trade, but it did bounce and did hit one of the resistance and coming back down. Fair enough. I'm not in this trade, a USO trade or ERX trade. But I still think this needs to come back down after, even after this bounce. I think it was a technical bounce. I think it needs to come back down. And also note that Xi Jinping, Chinese president, I think that gentleman is visiting Saudi right now. That visit is happening. So they are signing some bilaterals or whatnot. So I think that could also be affecting this price move right here. Cool. Let's get into Apple a little bit. Apple downside, it broke this level. It was supposed to hold this number, but it breached below there. And now let's go here for Apple. If it breaches the first standard deviation, obviously we're going to look for a second standard deviation about 138.40. If and I don't see anything that says Berkshire is liquidating their position as of now. I don't see that happening. And as long as Berkshire doesn't liquidate their position, I think this will be an ephemeral push to the downside. And again, this is coming off of the news that Foxconn is expecting their sales to be a miss on a double digit, or not a miss, but for the quarter, their sales are down about 11% or something like that, and that is directly reflecting here. So because of that disruption in China, COVID stuff, they're going to lose about 16 million units. So something like that. I don't really have those numbers on top of my head, but that is what is affecting this number. And obviously, the first standard deviation fails, then we are looking for a second standard deviation. And of course, we need to watch this on the lower time frame. If the lower time frame, especially the hourly time frame, gets oversold, then it's going to pull to the upside again. But the bigger picture is if it breaches the first standard deviation, very likely it's going to come back down into the second standard deviation, 138.50 or something like that. And besides that, look at the technicals here. The RSI is all the way down here. And anytime you see the RSI coming down all the way down here towards the end of the spectrum or end of this range, it bounces. Williams R is there at the lower end of the spectrum, but Williams R tend to kind of get pushed down further. It's still not there, but this is at a good bounce spot right here. Let's look at Apple on the lower time frame. It is getting oversold. Same thing, if it gets oversold, pushes up, and then this thing works in cycles. Very, very, good. Goes to the downside, goes to the upside, comes back down. Yesterday it tried to push up, didn't work out. Again today, the same scenario we saw here, pushed all the way to the downside. If the MFI is all the way down at the floor, so very likely we'll see another. It is bouncing. It is trying to bounce. How far of a bounce? I don't know. I just don't know. We still have this 8 below 21 right here on the 1 hour chart. So if you want to trade this, probably wait for this 8 above 21 kind of phenomenon to take place on the lower time frame. Then based on that right here, I think it is happening. But again, this is getting overbought here, and if it clears right about here, the resistance right about here, the 141.90, 142 resistance, then we'll see if it can push 142. If it clears 142, 142.40, then very likely scenario 143 for Apple. And if Apple stabilizes, then we'll have by extension we'll have the market stabilizing. And looking at the 1 hour chart, it wants to stabilize. It has to stabilize. This is a pretty decent oversold conditions for Apple. To the downside, I mean, doesn't mean that it's going to bounce right away and go, probably come back up to 147. Not going to happen. You have to be very selective about your trade. If this was pretty decent, this is a pretty decent sign. And if it clears the 5 right here, we can look for the 8. And either 10 o'clock hour or the 10:30 hour. We'll see what happens. Then we'll probably will push Apple into 144. Very likely. This is so. If it clears right here 142, then look forward for 142.48 to 142.50. Then there another breather. If that clears 142.88, if that clears, the 21 is sitting right till 144. So this is the path to the upside. And to the downside, the second standard deviation is sitting at about 138.70, and I would like to see a bounce. I would like to see a bounce just because of this RSI. I would like to see a bounce right about here. So let's see how that happens. Anything else? Tesla. Let's look into Tesla. Is anybody earnings today? Implied move 11. Can we review AAL and RXT? Newsplay. RXT is Raytheon, right? Let's look at Tesla. Tesla pushing down, and again, we still have this floor to get tested for Tesla. I'm looking for a bounce around here between this 160 to 158 range. I'm looking for a bounce for Tesla. I am a buyer for a bounce for Tesla. And if you want to be the way that I'm dealing with this is I've sold puts right around here. If it comes down, I'll take a position and run with that trade. And I want to be, of course, I want to be hedged on that. Right now, I'm not hedged on that. Right now I'm trying to pick the trade here. So the way I'll be getting hedged is that if it comes down right around between this 160 to 156 range, I will take a position. I'll sell covered calls. I'll use that proceeds from the covered calls to buy protective puts. That's the way I want to get hedged with that trade. So after that trade is placed in, I don't really care what happens to Tesla. I'll still be in profits. Cool thing. So the floor to the downside is still this 200 moving average for Tesla, looking for a bounce based on what is happening here. And the bounce could very well last into 188 all the way up to 197. At this moment, I don't really know how much of a bounce that would last into, but very likely if it starts to push and again the 5 is acting as pretty decent resistance all throughout. Then we'll see if it clears the 5, then we'll plot for 8. Bounce should either come right about here or again push down all the way here into 169. If it comes down into 169 for another bounce, then I think very likely it'll breach that 169 number and push all the way into this 160. Straightforward stuff with Tesla and looking forward here. It is yesterday. These were the conditions. So we saw a bounce in Tesla, and it was unable to clear the resistance. Same, those conditions are not prevailing right now. So I'm thinking a push down again for Tesla, perhaps into 173 or something like that. then look for another bounce there. And if Apple stabilizes, then there's no point looking for a push further down into Tesla. But if Apple starts to slide below 140, then very likely Tesla will be testing right about this number, 170. If that breaches 170, 169, if that breaches 160, 161 for Tesla. And don't underestimate Tesla saying that, okay, it moved 5 points, it's not going to move further. Yeah, it will surprise you. It will surprise you how fast this thing can move. What's the other one? AAL. AAL. Right. AAL, this thing, I'm not sure what to do with it. It's not sure how to deal with this thing. Never actually traded. What I can tell you is this is the worst business in the world. Airliners are the worst business in the world, and with economy slowing down, I think they're going to get hit hard. How much harder? This is ridiculously low price. They're trading at or around that 52-week lows. How far down can it go? I'm not sure. Probably 1380. To the upside, this is absolutely capped at 15. Don't see it above 15 at all. There's just no point looking at it above 15. This is the worst business. I don't really like airliners. RXT, Rackspace. Did they have earnings or something? I don't know. Okay, they are at the floor right here. This is a long-term floor. And if it breaches there, we'll look for further downside. But for now, I think we want to be bouncing around here. Let's
They had news, Darth. Ransomware,
Rackspace.
ransomware attack. Yeah.
Let's see. Yeah, so let them screw this thing, push them down all the way into 3.45. And let's see what is here. Okay, so looks like even though it is getting oversold on the monthly, it's still not bouncing. So not many people are interested in that. But it is definitely at a bounce spot, long-term support right here. Either it needs to bounce right about here, and if that breaches right about here, 3.73. Either of those two things. If this so bounce acts, if this bounce spot, the super trend act as support and catalyst, it will definitely bounce around here. But other than that, there is no reason for to look at this trade. And if it bounces, could very well last into 4.2, 4.25, all the way up to 4.40. All right, 1 minute to open. Let's move into live trading.